Good morning and welcome to the new episode of Dr. Lamba's Awakening Call. Most of the Indians, rather all Indians, especially the leaders, have been patting themselves on the back. And the reason that the economy of India seems to be shooting up. I said seems to be. India has become the fifth largest economy in the world, displacing UK. And while the government is patting itself on its back for its policies, Indians are patting themselves on the back that they belong to a country which is going to be the third largest economy by 2030. 7 years more. And it will be the third largest economy, a global leader. But is it really so? Why is it that the patting is not coming from the millions of the Indians who are living at the margin? Why is it that the businesses are not patting themselves for achieving a commendable job? Undoubtedly. We were very happy when we saw that India's business and consumption activity showed conflicting signs of recovery. But then I said conflicting signs. The recovery was there, but along with there was elevated inflation, rising borrowing costs, fear of a global slowdown. And this weighted on Asia's third largest economy, that's India. Demand for the Indian goods and services softened. A cross-section of high-frequency indicators, if you look at that, they show a very confusing picture. The needle on the dial measuring so-called animal spirits remains steady at 5 last month. And the gauge using a 3-month weighted average smooths out the volatility in the single month reading. Now, just see the Reserve Bank of India has raised interest rates by a total of 140 basic points in 3 months this year. 140 basis points in 3 months. Sorry, in 3 moves. They did it once, they did it second time, they did it third time. And in 1 year, increasing the interest rate on 140 base points shows that the Reserve Bank has some reservations. And it has also signaled the future tightening should be calibrated to ensure there is not a massive slowdown in the economy. So there is a fear in the Reserve Bank that the economy is going to slow down, and all this enthusiasm might be misplaced. A pulse check on the economy with a gross domestic product data for April-June quarter shows a double-digit growth, and coupled with that is a reduced demand. And the reason for this growth is wider reopening from the pandemic. But the pandemic is coming back. The news is not very heartening. So let's have a look at the details of the dashboard and then see whether we should really be elevated. Yes, it's good to have optimism, but then if the optimism is based on reality check, that's a better. And the reality check shows that we are still not out of the woods. We are still not, Indian economy is still not that reliable, that profound, that sound the way it is appearing to be. Look at the business activities. there was a survey by the purchase managers, and that survey shows that the Indian service activity in July was falling to the lowest level in 4 months, and that is on weaker sales growth and elevated inflation. When your business activity shows that the service activity is falling, then you have got to open your eyes and pay attention. While domestic demand for the Indian services remained steady, the international demand worsened, and that offset gains in the manufacturing sector that expanded the highest level in 8 months. So in 8 months, the manufacturing sector had gained a lot. But this international demand weakening has offset all the gains. So we are back to 0 point. Now, moderation in business outlook pulled down India's SP Global Composite Index from 58.2 to 56.26. So this pulling down of the composite PMI index shows that the global rating is something not to be sneezed at. It has to be taken into consideration. Now look at the exports. So business activity we have seen is not very satisfactory. Exports. The trade deficits widened to a fresh record of almost 3 billion as export growth slowed to a 17-month low. Imagine it. 30 billion trade deficit between the exports and the imports. And you are happy with that? Your imports increase means that somebody else is gaining at your cost. And this is 17-month low. There is a weakened global demand for the Indian goods. And a levy on the outbound shipments of fuel makes up for more than 15% of the Indian exports. So if you lay a tax on the shipment of fuel, that's not your export. And that makes 15% of the export revenue. You see, whom we are trying to deceive? Ourselves? Why can't we be honest? And I'm telling you very frankly that Nirmala Sitharaman is not doing a proper job. I don't know why she is the finance minister. She shouldn't be. She hasn't taken into consideration that you have a fresh record of $30 billion gap, and whatever exports are left, 15% are just a levy on the outbound shipment of fuel, which is not export. Then imports have stayed near the record high level because of the rupee falling. And rupee is today one of the worst performing Asian currencies in the last 3 months. People I talk to, they say compare with Pakistan. But your competition is not with Pakistan. Your competition is with China, Japan, South Korea, period. You want to compete with the worst player? And the weaker rupee, of course, has enabled the imports to stand at a record high level. Crude, which comprises 1/3 of the total Indian imports, and coal, with 8% share, have primarily contributed to the rise in the inbound shipments. But whatever you might say, the situation is not a very sanguine one. Now look at the consumer activity. Passenger vehicle sales rose by a second straight month, held by a broad-based recovery in all segments, and that included two-wheelers. So, So this increase in sales is exactly what is going to harm, because the more vehicles are on the road, you need more fuel, and you have got to import more. Your import bills keeps on going up. So while supply issues due to semiconductor shortage are easing, automakers caution that the costly loans could crimp demand for the new vehicles. So the second-hand vehicles which are occupying, and manufacturing activity does not depend on second-hand vehicles. As a matter of fact, if you look at the economy of US or Canada, is the dumping of the second-hand vehicles. They are just sent to scrapyard. In India, you will find 30-year-old cars still on the roads. Then look at the bank credit. The bank credit continued to grow despite higher interest rate. I told you that the Reserve Bank has increased 140 basis points in 3 moves in 1 year already, and it's still not the end of the year. So the bank credit has rising more than 3 years to 14.5% at the end of July. Liquidity in the banking system continues to remain in surplus. And when there is liquidity in the banking system, that shows that the capital is not being used. It's not earning. It's just lying in the cold storage. And the capital not being used is almost as if the capital is not there. And we are happy. So bank credit continues to grow. And the bank credit continues to grow despite the higher interest rate. Then the people are in fact worried that the interest rate might still go up. So take the credit today. Make hay while the sun shines. That's the attitude. But that's inimical to the business activity. Then look at the industrial activity. Among signs of industrial activity, factory output as well as the coal sector signaled moderation in June. As electricity consumption, coal production slowed down with the onset of the monsoons. This year, we have seen that the year-to-year growth in the industrial production decreased to 12.3%. In May, we reached the highest level, and then the fall started, and it came to 12.3. The growth of 8 key infrastructure industries dropped from 19.3% to 12.8%. That means 7% decrease. And mind you, this is just in 1 month. If the industrial activity drops by 7% in 1 month, and this trend continues, do you know what's going to happen? Some industries would go out of business. They'll go into liquidation. They'll go bankrupt. Unemployment will follow. And when such action takes place, it is cyclical. So, on the one side, we are saying that we have become the 5th largest economy, and then the indicators show a different picture. The reality, we have not become the 5th largest economy because of any big deed on our own part. The British economy suffered badly because of Boris Johnson's wrong policies. And by default, India became the largest economy. Not by itself, but just because automatically if your competitor, say you are fighting a wrestling match, and your competitor swoons, you win. Is that your real victory? A Pyrrhic victory. No way that you can claim to have one. So that being the case, India's economic activity showing the confusing signs shows that there is something basically wrong with our fiscal policies, with our industrial policy, and we need to coordinate the growth in infrastructure, agriculture, industry, and exports. As a matter of fact, what we need is a nodal group coordinating all the activities so that all the indicators become positive, and this ambivalence is somehow or the other reduced. Otherwise, we can be like ostriches, happy that we are getting anything, and the reality is much too different. Mind you, there are lies, damn lies, and statistics. And this pseudo growth that we are the fifth largest economy, realize it, you are the fifth largest economy because the British have defaulted, not because you have done better. So this is a growth by default. And on this, we should not boast our growth, not sit on our laurels, but try to consolidate this now and then go ahead. That will lies the economic salvation. Thank you.